Thank you, Stephen. Welcome everybody to Tax Lien Talk 2015. Just as a quick promotional 2016 thing, we're switching the way that we do Tax Lien Talk, as Stephen had said, and this is all under the new direction of our marketing director, Stephen Jordan, who's done a fantastic job this year, bringing a bunch of new conferences in the form of one-day seminars. Next year, we're going to be doing a lot more webinars. This is live streaming, so watch what you do, watch what you say. This is live streaming now. And we're going to be doing a lot more webinars next year at the request and behest of a bunch of our clients. So welcome to Tax Lien Talk 2015. In January, we will be back down in Puerto Rico, which, as most of you know, is where BCMG, Blocks Trade, and all of our other affiliated companies are now headquartered. We're going to be doing the annual conference there from now on for the foreseeable future in January. And that's going to be at the Vanderbilt, at St. Regis, at a number of different places. We'll hop around the island, but the local government down there has been really incredibly supportive of a lot of things that we're doing, and we want to bring the conference back there. Also, everybody seems to have had a wonderful time the last time we were down there, and the Vanderbilt rooms are now open, Bruce, so you can sit in. So I want to talk today a little bit about the secondary market. Brad and I chat about this on occasion, and every single one of you knows us mostly because of Blocks Trade in the secondary market. If we take a step back to look at how the secondary market for property tax liens has evolved, if you will, over time, you can make the comparison, perhaps, which we did last year, to equity capital markets, right? I mean, if you look at like the giant, wonderful, big equity capital markets that some of you play in or have played in the past, the New York Stock Exchange, the NASDAQ, right? I mean, that really encapsulates the regulated, large, huge marketplace that is equities. You can trade them from your retail account, you can trade them from an institutional account, and all of these are settled in giant block trades. But there is also a private shares marketplace. Most of this was pioneered back a little bit pre-Facebook. We know very well at Second Market. We were going to do some things with them as well in property tax liens. But the private shares marketplace is an interesting entree into equities in a non-IPO way, right? And so this is a very fun little niche market that has absolutely exploded over the last decade. And now you can trade private shares without somebody going IPO. You can trade private shares on a number of different marketplaces. There's Second Market, there's Receivables Exchange, there's Shares Post, and the big marketplaces are taking notice of this, right? The New York Stock Exchange actually owns a bunch, or NASDAQ owns a bunch of Shares Post. NYSE owns a bunch of the Receivables Exchange. And so they really do like these kind of strange little esoteric marketplaces that they're trying to grow. It's almost like a little bit more of a sophisticated Pink Sheets. And so if we take that analysis or that analogy and move it to the debt markets, there's really not a tremendous amount that goes on in the municipal bond marketplace that's kind of on a off the radar fashion. And tax liens definitely are one of those things. So if you look at bonds.com, which is actually now owned by the ERSA, but our former CEO at GFI Group, where I started the first exchange for tax liens, Mickey Gooch, he's now on the board of the ERSA under Gooch Capital, and they're doing very interesting things with bringing municipal bonds and larger corporate issuance governance bonds online. And there's all kinds of different over-the-counter transactions that happen, but you would never know about them. These guys are doing a little bit more in terms of transparency and bringing live feeds of very big bond transactions to the marketplace. Similarly, if we look at kind of municipals as, Goldman, Morgan Stanley, going out there and meeting with all of these treasurers, all of these governors, all of these tax officials, and saying, okay, here's your general obligation bonds, here's your revenue-backed bonds, here's all the different things that we can do to bring some liquidity to you from the public finance sector. There is, as you all know, because you're here in the tax lien business, there is this wonderful little niche, and we look at it the same way. Property tax liens are a way for governments and local governments to monetize a piece of their balance sheet that they otherwise would not be able to monetize. And this is, of course, asset-backed, which helps you as investors and service providers be able to do this with confidence. So where do we fit in terms of the size of the debt markets? You all know this. Brad Westover can speak to this much better than I can. But we're kind of a little blip. We're this little orange blip here at approximately 10 billion. The National Tax Lien Association did a study that goes a little bit more depth. But if you look at it in relation to the other debt markets, it's very, very small. And where are we going as an industry, right? So if we look at the tax lien business over time, and we're going to do a little bit of a timeline in a second here. But if we look at the tax lien business over time, we're decreasing in the primary market. The villainization of the tax lien industry panel that Bruce Bronster is going to moderate next, that Brad's going to sit on here. We're going to talk a little bit about why some of this decline is and how we might be able to help as an industry to generate some more paper for all of us to invest in, to trade, to service, etc. But there is a very, very definitive decline as of late in the property tax lien volume. However, in the secondary marketplace, we see the volume has increased exponentially. At the beginning of 2015, we were a little bit bullish. We said that we estimated about $1.5 billion. Where's Tom Tarasola? He's over here. Between Lumentum and there he is. Between Lumentum and Blockstrade, we estimated that hopefully there would be about $1.5 billion worth of paper that would go for sale in the marketplace, not necessarily transacted, but listed for sale and priced in the marketplace, which is almost as important as traded for you guys, and especially for those of you that are looking for senior debt financing. But this year it looks like it's going to shake out to be $750 million-ish, right? We'll talk to Tom after, but I think it's probably going to come out to be $750 million, maybe a little closer to $700 million, that was offered for sale at one point in time in the secondary market in kind of a formal institutional way. So trend down, trend up, it's kind of a natural, logical thing. But as we increase a little bit of transparency on the secondary market, as we decrease trade size, because the trade sizes are definitely going down, but the volume and the frequency of trades is increasing a lot in the secondary market. And so, we're doing trades now between the two firms, and then kind of in the shadow market, we're doing trades 100,000, 300,000, 500,000, whereas before there were much less frequent trades, a few a month even at some points, but they were $1 million to $5 million at a clip. And part of this is due to some of the trends in the property tax lien marketplace. So if we talk about the five main factors, and when Corrales and I were discussing the slides yesterday, we said, look, what are the trends in the five main factors that are driving this increase in secondary market activity, decrease in the size of the transactions, but increase in volume? The first thing I would say is collateral polarization. And what the heck does that mean? Well, so we're seeing a lot less of paper in the middle, right? So if you were to assign a credit rating, right, which they do to the securitizations, but you don't to individual tax liens yet, we do have a very interesting product called Lien Score that we're testing and beta testing that should come out in 2016. But if you look at liens individually or in like-kind buckets, right, you're seeing that they're kind of polarizing in the secondary market. People are considering them really, really good or really, really bad. They're falling in two buckets, right? In the past, there was this kind of normal distribution curve of property tax lien scores or values or interest in these property tax liens. But you're seeing them go to the AAA or kind of the write-off type bucket very, very quickly now. And I think that the lien itself and the underlying collateral itself has not necessarily changed markedly over the last 24 months, but I think that it's public perception and more importantly, the bond market's view on these instruments as collateral for things like bonds that will drive some of this opinion. And so it's kind of one or the other. It's either good or it's bad, and we just really have not seen that before. So if we see good, it fits in this certain thing. The disposition methodologies are a little bit different if it's considered, this AAA grade amazing paper. And then if it's bad, then it kind of gets kicked to this servicing, workout, et cetera model. So that is helping to decrease the available product in the secondary market a little bit, unfortunately for us. So if we go to the second point, decreasing product availability is also a factor of the graph before, right? This one right here. If the trend is going down in the primary, we feel that about 12 to 24 months later in the secondary market, as all of you that trade with us know, right? So if the volume is way down in the primary in 2015, in 2017 there will likely be much less paper to trade in the secondary market. So we're seeing a little bit of that right now, but as we know, the property tax lien marketplace has been around for quite some time, and the volume we anticipate will come back as it always has. But the other thing about decreasing product availability in the secondary market is people are holding on to it a little bit more than they used to, right? And some of the managers and the servicers in the business are putting them in structures that really restrict their ability to offer them for sale or put them out in the marketplace to offer liquidity to the end investor. The third thing that we want to discuss in terms of trends in the secondary market is tightening spreads. Everybody's making a little less money. Well, I shouldn't say everybody. Most people, most of our clients have told us that they're making less money in the marketplace. The necessity for cheaper senior debt, right? The cost of capital needs to be much lower. Spreads are much smaller. The return on investment for property tax liens is not what it was 3 years ago, 5 years ago, 10 years ago. We do anticipate that returns. We hope that it returns to double digits at some point. But with all of this competition in the marketplace, with very, very cheap money, with much more flexible senior lending structures, with more affordable, if you will, capital, you're going to see spreads tighten in the secondary market, right? The trading range is not so wide. When I started the tax receivables desk at GFI that Stephen had mentioned before in 2010, our first trade that we ever did was a New Jersey trade, and our bid-ask spread, right, what they wanted to pay versus what they wanted to buy, was 30 by 70, right? Anybody that's ever traded anything or cares about bond markets or any kind of asset would just laugh at that. That is not, that's an out trade. That is just absolutely ridiculous. There's a 40% between what they wanted to sell for versus what they wanted to buy for. And we got that done, right? We narrowed the spread. But that was the type of ridiculous spread that you saw in the property tax lien market in 2010, 2011, even into 2012 in some of the more esoteric, smaller places. That's going away, right? Spreads are tightening. There's a little bit more consensus. Part of it is because of this collateral polarization and this kind of bucketing of property tax liens, if you will. But spreads are definitely tightening. And the overall return for the industry and the industry participants is decreasing. So in response to this, we feel that a lot of the service providers are becoming more flexible with you as clients, right? We are here for the long term. We're not going away. We love property tax liens. It's what we do every single day. And so we want to work with our clients in the marketplace, as do most of the other service providers that are our partners or that we know that are our competition. So one of the things that you're seeing is less fees, right? Less fees on the data side, less fees on the platform side. You probably got the announcement. We cut our sell side brokerage fees, right? So we used to charge 1.5% on the buy and on the sell side. Now we do not charge for listings, right? It's completely free to list, and it's free if you sell it. So we're seeing trends, though, that are a direct response to all of your returns going down across the marketplace. And we hope that they return. And maybe we'll be able to charge for listing again in the future in 2-3 years. But the fourth of 5 points here is a very definitive movement of OTC, over the counter, to listed. And what do we mean by that? Technology is coming, right? So we purchased a company called Lien about 18 months ago, and we're turning it into this very interesting product called Lien Cloud, which is going to be a distribution methodology for liens one by one that's going to come out in January. And I think that's a little bit of a foray into the individual lien sale market. But Access Terminal and Lumentum's DigiPan software and TSR software, etc., where you can look at all of these things online. You can look at listings online. You can see and drill down into these assets online in a software as a service cloud type model is increasing the movement to this listed methodology. And I think that you'll see a lot more collaboration across the marketplace because of this, because there's increased transparency into what's out there, what it's priced at, and decreasing fees, which is good for you as investors and not so great for service providers, right? And I'll say, and Nick's going to laugh at me, I'll say the same thing that I say at every single conference. With increasing transparency into a marketplace, with the maturation of any marketplace comes specialization, and comes transparency, and comes a little bit more efficiency. So the last thing that you're seeing that is kind of unprecedented, at least in the property tax lien space that I know of, is you're seeing collaboration between brokerage houses, right? We're doing a deal with Lumentum right now. You know, we talk, you see us hanging out with AJ and Tom and Ian and all those guys. We're recognizing as an industry, we're recognizing as service providers that what we need to do is work together. In the real estate marketplace, you have a listing broker, right? You have a sell-side broker and a buy-side broker. And sometimes they work together. Sometimes they have the buy and the sell side of the listing, but it's not that often. But why is the tax lien marketplace so different? Well, it was very clunky. It was very immature. It was very, you know, I've got my little set of clients, etc. We all have the same clients now. It's not that big of a marketplace, right? And so when you see collaboration of service providers in an industry to serve their clients better, I think that it works increasingly well for the general marketplace. So we've done a couple trades together with Lumentum where one of us got the buy side, the other one got the sell side, and we're seeing that there really is value in that, and it's accretive to the marketplace as a whole. So we said sell side brokerage is free at Blocks Trade, so you should list your portfolios. Little plug. But going back to the benefits of secondary markets for the property tax lien space overall. Well, for the issuers, right, for the municipalities and the governments and the local constituents, they get to raise capital. Same thing for the primary market, you know, that Brad and the NTLA talk about. We get to support infrastructure, although indirectly when we're trading in the secondary market. And obviously we get to fund the operations of the local municipalities, the schools and the roads and the teachers and all of the examples that we give every day. But the interesting thing that you need to remember is that without a robust secondary market, right, without liquidity, which, let's be completely honest, this is still not a liquid market, right? And I don't know that everybody wants it to be a completely liquid market. This is not a liquid market. We're still trade by appointment. It's still chunky, and these trades are still very, very, you know, one-off type trades. Even if we do 2, 3, 5, 10 a week, they still will be one-off trades because of the unique nature of the product. But more issuers will come to market if they know that the investors are there, and more investors will come to market if they know that there is a disposition methodology and they can borrow money to buy these liens, right? And so indirectly, in a very strange way, but it's not that strange if you study economics on a macro level, if you look at the issuers of property tax liens, new jurisdictions to give you more liens as investors, which is what you all want and you're all yelling for every day, new issuers will be much more likely to put liens into the marketplace if they have buyers that will pay them more for the liens. Of course. Buyers will pay them more for the liens if they know that there's a marketplace that they could dispose of the liens, or if they can borrow a ton of money to go buy the liens, right? Nobody wants to buy everything in equity. And banks the first thing they ask is, what happens when shit hits the fan? What happens when things go bad? Is there a marketplace for this, or do I have to fire sell everything? And so in this kind of daisy chain thing, the existence of a secondary market is a very, very important thing for new jurisdictions, new paper, and for issuers. What's the benefit to buyers? Well, that's you guys, right? I mean, there's unique investments. Every tax lien is like a little diamond. There's a funny fact. When we were designing the first screen that we did at GFI in 2010, we're trying to find a like-kind product to look at, and we looked at CDS, and we looked at bonds, and we looked at munis, but all of those are different, right? You can issue $100 million worth of XYZ paper. Every tax lien is very, very unique. So we actually looked at Blue Nile. Has anybody ever been to Blue Nile? The diamond site, Blue Nile. So if you go to BlueNile.com, right, they've classified all of these diamonds, right? Every diamond is unique, or at least that's what De Beers' 2-decade marketing campaign wants you to believe. Every diamond is unique. So we actually based the first trading screen and a lot of the architecture behind the first trading screen off of a diamond site, a diamond retail site, as opposed to bond screens. And it's really, really interesting, and they classify them and they do all these things. You probably won't go there, but it's fascinating to me. So they are unique investments. They are very, very unique investments. Every tax lien is kind of like a little diamond, even with this polarization and the bucketing of property tax liens. Why else do buyers want to come to the marketplace? Well, there's objective data, and there's data providers out there that are giving more and more data for more affordable prices, and are doing it in a much more transparent way. Tax Sale Resources, Brian was here a minute ago, just put out a sale results thing I saw last night or the night before. Right, there's more transparency into the data for the marketplace. In the secondary market, you don't have to go and buy a bunch of data and do whatever. It's all done for you. Right, it's presented in a neat little package where you can do your due diligence and pick up the phone or click and buy. And then possibly the most exciting thing for buyers in the property tax lien marketplace on the secondary level is that it's immediate availability. You don't have to wait another 24 months to go to Broward County, Florida. You don't have to wait for the next Indiana auction down the road and hope that there's not 2 times as many people this year in the room as last year, and they cut it to 3% instead of 5% for the overbid. But it's immediate availability. You understand what you're buying. It's very transparent as to what you're buying. There is data that tells you what you're buying, and you can model returns, right? So for smart people sitting there trying to fill buckets in a portfolio management style, that's a very important thing. They can understand, they can explain to their investors, they can model their returns, and they can base their bids and their prices accordingly, like in all of these other more mature marketplaces. And then, of course, for the sellers, there's maximum liquidity. Other than it being free now you have complete liquidity. You can put it into the marketplace and you get a market price, right? You're not selling at a fire sale price when you have to. And what we're seeing as an increased trend, I don't know if you're seeing this too, Tom, but as an increased trend, we're seeing people with the new announcement that we made, we're seeing people put portfolios in the marketplace and just sit there, right? They don't have to hit the pricing. You control the pricing as an investor. You control as a lister whether you want to say, yeah, fine, sell or not sell. But people are essentially treating it as a free look provision, if you will, right? They're having their portfolios in the marketplace at all times to be priced, and they're like, oh no, we don't like that price, we don't like that price. But at least you have an interesting mark-to-market price at all times, with really with not much downside. You have complete control as a seller, as we said. You decide whether you like the price or not, and then you do have superior analysis when it comes to what the portfolio is worth. And as much as we all love models and M1, M2, M3, I had a really funny finance professor at one point in my life. They used to say, the monetary policy is split up into M1, M2, and M3, right? So there's mark to market, mark to model, and then make it up. And the tax lien marketplace has been in the make it up category for just so long, and most of us mark to models, right? But there you have an ability, if you so choose, to mark to a market price. You do have one of the third M that is relatively reliable now. So how do we get here? How the heck did we get here? The tax lien markets have been around forever. and there are many people in this room much more qualified to speak on this topic than I am. But as I understand it from my conversations over the last 8 years in the lien business, it started out with localized buyers, kind of funding each other, doing their thing, right? It moved to large banks and wirehouses. Hey, these things are pretty cool. On a risk-adjusted return basis, tax liens are an amazing thing, right? They're very well collateralized. Lien-to-value ratios are great. The returns are through the roof, yada, yada, yada. We've all heard it. And then entered into kind of where the predecessor to Blockstrade, GFI, got into the marketplace. We said, all right, so we see a lot of middle market funds with leverage. And so there were some banks that came in. There's always been lenders in the space, some better than others, and some have blown up fantastically. But the lenders that are in the space now seem to understand the collateral in the marketplace and the loan covenants a little bit better than some of the things that we've seen in the past. But there's a lot of middle market funds with leverage running around, right? That's 80% of our clients are middle market funds with leverage. 10 million to 75 million, got some money, got a line of credit, Capital One, Wells, B of I, however you want to look at it, and we've got some money to go buy liens. And that's also contributing, if you go back to the other side, to the polarization of the market, because there's a very, very similar, there's a consensus really as to what liens are like, what liens fit in what bucket, because they're told what they can borrow against, right? We're all told we can borrow against, and he who has the gold makes the rules, right? So up until 2010, the marketplace was really run by middle market funds with leverage. And then in 2010, there was the first real secondary market where we started trading property tax liens on a very, very inefficient, chunky, terrible basis. It was really, really painful. Thank you to those of you that did trades with us back in 2010. I don't know why you did. It was really horrible. But somebody had to do it, right? I mean, we were started out. Somebody had to do it. We're crawling. Then we started walking a little bit, albeit slowly and kind of hunched over. And then as we moved into the change from the DART platform to Blockstrade, we started getting it a little bit more. And the introduction of a market making concept helped a little bit, helped liquidity a little bit. People could actually sell some of the things that the marketplace didn't want to jump on right away. And that's where we saw volume increase and spreads tighten a little bit. So then 2012, and then in 2014, those of you that are unlucky enough to listen to me talk every day, like the 70 people that are here from BCMG this time, hear me talk about industry consolidation, right? And this is not just on a service provider level. This is very, very much on an investor and a fund manager level. And I don't know if there's studies, or maybe we could do a study, Brad, of the National Tax Lien Association, but consolidation in the marketplace isn't necessarily a bad thing, but it is a very important thing in our business. Funds are buying other funds, whether it's the infrastructure and the name and the LLC, or whether it's just all of the tangible assets and then throwing that kind of shell into the trash can. It's very, very important for everybody to understand, right? Consolidation in the marketplace on an asset level changes the way that all of you invest, both in the primary and the secondary. And then what the world that we live in every day at BCMG on a service provider level is we're seeing lots of consolidation. We've purchased 4 companies in the last year and a half, right? And not the ones that are our own that we moved down to Puerto Rico. We're seeing consolidation. We're seeing more collaboration, if I can speak, on a service provider level. And we're seeing these service providers try to deliver a superior product to the marketplace. And with everyone earning less money, everybody making less money, there's less of the pie to go around. We have to deliver the product in a way that is easier for you to access, that is cheaper for you to access, but that preserves our margins, because we do not work for free. I mean, we're not running a nonprofit here, right? So we have to preserve some kind of margin so it continues to make sense for us to service the industry. And so we have tried to do that through technology. And so Access Terminal for us is our answer to, okay, we can't win everything. We can't own everything. We can't be everything to everyone. But we can step up and say there has to be a platform. Bloomberg did this, right, a long time ago. There has to be a platform in the property tax lien business that allows constituents to come together on the asset manager level, the fund manager level, on the service provider level, and just kind of hang out in the same place and compete in an open, fair marketplace, right? I'm very, very much a capital markets guy, free market capitalist guy. Access Terminal is BCMG's answer to that, right? So who sits in the marketplace informally right now? Well, you've got the auction providers, right? The real auctions, the Grand Streets, the SRIs, the Archons. You've got the sellers, all of you guys in the room that run funds. You've got the buyers, all of you guys in the room on the other side of that trade. You have the brokers, right? You have the issuers, which are the most important in this, that Brad's going to talk about shortly. You have the bankers, right? And we're not talking about the senior credit providers like Capital One that provide credit to the tax lien marketplace, though very important. Right here, we're talking about bankers that advise the issuers on when and how much to put product into the marketplace. You have the marketplace, which we are putting out there as hopefully will be Access Terminal for all of you. You have data, and there's many data providers that will all hopefully come together on this marketplace. You have the market makers, who are the buyer of last resort, that buy and sell, and then of course you have the clearing agents that make all of that work. And so how do these guys come together and try to make all of you happy? Just like this. Over-the-counter markets are not very complicated. This is not rocket science. This has been done a million times over the course of history in much, much more complicated asset classes than property tax liens. So those of you that have worked in other asset classes or studied other asset classes, don't fall asleep on me here, but there's the listing and then there's the bidding. Seller goes to a broker goes to a data firm gives you more analysis, goes back to the broker, then they go to the marketplace. It works in real estate, works in bonds, works in equity, works in wine. There's actually a really, really cool wine exchange we were looking at a while back. Works everywhere. And then on the other side, the bidding, right? The buyer goes to the broker, right? Same broker, different broker, it doesn't matter, as long as the broker has access to the marketplace. Broker goes to the seller. They can't come to a consensus on what the thing's worth. They go to the market maker. Either way, the trade is done. They go to the clearinghouse who interfaces with the local municipality. This is not rocket science. This is not difficult to do in theory. But it is what we do every day, and it is much harder to execute in practice than you think. So we said we want everybody, all the players, that entire over-the-counter process in one portal. We want it in one place. And we recognize that we cannot be the best at everything anywhere. As much as we would like to lie to ourselves and think that we could be, we just can't be. We can't be the best broker in every place. We can't have the best relationship with everyone, right? We cannot have the best clearing in every single county in the United States of America. We can't have the best data in every place, right? And as much as we endeavor to try to increase the BCMG sub-company brands to a point where they do serve you better, we can't always be the best. But our theory is this. If we introduce a marketplace, this Access Terminal, this Bloomberg-like creation, if we introduce this marketplace where all service providers can come together and everybody offer their best, right? Then the clients win, the investors win, the portfolio managers win. And we've seen this very, very successfully in every other market that you know, even these ridiculous little retail markets, right? If you put a platform there and allow service providers to compete in a very open, fair way that is transparent to clients for pricing, for quality, and otherwise, then I feel like you've got a place where everybody can kind of do their thing, right? And if you're not as good at Kentucky data as somebody else, well, people aren't going to buy your Kentucky data because there's a better Kentucky data provider there, right? And so what that does is it elevates the service to the whole industry because everybody's competing for these little niches all in one place. And it allows you this central marketplace, if you will, to do all of the things that it is that you need to do as investors or bankers or service providers, right? So just a couple quick screenshots, and they're gonna when Jed at Vadar talks about their product. Gio's gonna talk about Access a little bit. I think it's today, tomorrow. I think it's tomorrow. But we've rolled out and is live now, and we've gone through about 6 months of testing of the primary market piece of this. Right? There's a ton of portals. That's what we're calling them in the Access terminal, and there should be lots of providers to come in. We're using BCMG companies to kind of prime the pump because somebody's got to be first, but we do not want to be the only broker on the secondary market page. Believe me, we don't. That's not a transparent open marketplace, right? We do not want to be the only data provider on the primary market page. We do not want to be the only clearing agent. We do not want to be the only, well, we don't have a law firm, but we don't want to have one law firm, right? We don't want to have one recommended law firm. We don't want to have one recommended tax title clearing firm, right? We want to have people that compete in an open, real marketplace, which is scary to some people. I know some people probably hate me for saying this, right? They have their little niche, they have their little client niche. I understand that, but this is the way that that we see the marketplace. So, for example, in the primary market due diligence, right? Here's what you do. You select your auction, you go into US, boom, you select your auction, you filter your auction results, and all of this data comes from multiple data providers. All of this data comes from a ton of people in the marketplace that want to contribute to a broader, larger platform. You filter your auction results, you choose your liens after you choose your data provider, and by the way, you can actually see data streams from multiple data providers. It's very, very cool. And you can compare point by point who has updated information, et cetera. You choose your liens. Then you can drill down onto a parcel level. And many of you have due diligence screens that are very similar to this. We understand. But some of the differences about this is that we actually QSIP every lien that's existed over the last 5 years and into the future, right? So data persists across time. You know, on your place, on your portal, your login, in a protected, secure way. This has bank level security. On a protected, secure way, what you thought of the same property last year, 3 years ago, 5 years ago, right? As long as it's in there. So you can pull multiple data providers, parcel maps. You can see Google Drive By. You can actually click to order photos right there in the terminal. You can determine whether you want to bid, no bid, etc. We've got hot buttons and really cool little things that you can do the shortcut for. But the idea is that you can run your portfolio the way that you want to run it in one place, right? And we don't charge for the Access terminal, which I think should give credence to the fact that we want an open forum for data providers, for brokers, for clearing agents, for title companies, for photo providers, everybody on there. Then the other screen that's coming out, so that's live. It's live now. We're taking it out of beta and pushing it to the rest of the marketplace on the 17th. So I think that's next week. We're pushing it live to the marketplace on the 17th, and you'll see a very, very consolidated, very concerted effort to do so. And then in the secondary market, right, this comes out in March of 2016. So this already exists kind of informally now. We play around with it now, but it'll be released to the market at the end of Q1 next year. And hopefully, when it's released to the marketplace, there will be multiple brokers all in one place. And that's what we're working on now. And then the transfer, we already have this behind the scenes there. It's a much, much more sophisticated tracking system that Lien Clear uses now, which is our clearing firm. But we endeavor to have other clearing firms use the portal for clearing and recording their liens as well. So just as some closing comments, the Access terminal is really our answer to all of these trends, the 5 major trends that we talked about before in the marketplace. It's our answer at BCMG and Blocktrade and Lien Clear and all these places to what you're telling us in the marketplace and what the marketplace is telling you. Decreasing spreads, a lot of consolidation, and it really hurts, right? It really, really hurts from an investor level, from a lender level, from a service provider level to be in the property tax lien business right now. But we think that, just like we said before, with the maturation of any marketplace comes specialization. If people can if people can get together in one place and do things more efficiently, right? Our margins can stay the same. Maybe our margins can even increase as service providers and investors, right? And we can work together collaboratively, not in a bad way that the industry looks at collaboration before, but in a very, very good collaborative, transparent, open way to not all do the same thing and spend a bunch of money on the same stuff in our little silos. Allow each other to leverage the collective voice and the collective data and the collective knowledge on an institutional level in the industry, and to put that in one place. So, service providers, I would encourage you to come and talk to us. We endeavor to have portals for pretty much everything. Then, of course, investors, we've been bugging you forever on this. And if you're not on the beta platform, I don't know why. It's free, and it's pretty cool. So we're going to push out to the marketplace next week. I really do appreciate everybody's time. And I'm gonna bring Steve and Jordan back up here if there are no questions on trends in the secondary market, what's going on, or anything that we're doing collectively as an industry for secondary. Questions? Yes.
What was the actual executed volume?
We did about 300 million. Well, I don't know about the competitors, but we did about 300 million. But there's still a month left. Which is a far cry from the 750 that we listed as collectively as an industry. It's about 680, 690 now, but we have some things coming through, and there still is a month and 3 quarters left. December is historically our largest month in the secondary market, every single year without fail. So mostly because there's really nothing else going on. People want to clean up their books. People want to do a number of other things. So. Anybody else? Very good. Stephen, thank you guys so much for your time, and enjoy Tax Lien Talk 2015.